Good morning, everyone. I want to show you this beautiful sunrise. I don't know if you can see that very well. That is the sunrise I wake up to every day. As you can see, we're putting in an in-ground trampoline. But today I'm actually going to be talking about mileage and taxes and how that impacts you. So let's get started. My name is Jacob Curtis. I am the owner and founder of Curtis Accounting Solutions. I help quilt shops with their taxes, bookkeeping, payroll, anything finance related. I'm an outsourced accounting department. So when we talk about taxes and mileage, the goal here is to reduce your tax return, reduce the amount that you owe in taxes by making sure that you're getting all the possible deductions you possibly can. Now, let's be honest, it's a little difficult to get that tax mileage deduction sometimes. We've got to make sure that we've got things set up the right way. And a little disclaimer here, this can't be considered tax advice. This has to be educational. So I'm just trying to educate you on how to get this, but not necessarily telling you that you should get it or that you can get it or anything like that. So make sure that you talk with your qualified tax preparer, whether that's myself or somebody else. All of this needs to, it's just all part of the training and education experience, okay? So the way to use your mileage, there's lots of different ways. But the best way is to keep track of it. You've got to use a mileage log. Everywhere you go, you've got to have a log of your mileage. If you're not keeping track of your mileage in a log, you won't be able to use mileage as a tax deduction. It's just one of those quirky little rules that the IRS requires us to follow, is that we have to have a log. Meaning if you drive somewhere, you write the date, where you drove, why you drove there, what the purpose was. You gotta kind of remember the 5 W's: who, what, where, when, why, and then if you want to, you can actually keep track of it. The 6th question, which is actually an H, but a how. How much did it cost specifically? And there's 2 different methods to deduct your mileage on your tax return. Method number 1 is to use the IRS method. That's what's typically called the IRS mileage deduction method. For 2021, that rate is 56 cents per mile, which is pretty good. And if you, the second method is the actual method, and we'll probably get into that a little bit. But the IRS method, let's think about this, is it really worth keeping a mileage log? That's probably the first hurdle we've got to jump over is it worth me keeping a mileage log to get that deduction? Because you have to have that deduction in an audit. If you don't have that log, if you have to have that log, if you don't have that log in an audit, and the IRS audits that, then you're going to be in trouble. They're just gonna disallow any of the mileage deductions you've already had up to that time. And so we've got to make sure we have a log. The other thing is you've got to make sure that if you are reimbursing yourself or employees for it, that they have turned in their mileage receipt. You've got a mileage form or something like that that says we started on this day, we went from point A to point B, it was this many miles. You've got maybe a picture of the Google Maps so you can see what it is. You've signed off on it, was pre-approved. That kind of mileage log is what's needed. If you don't have that kind of mileage log, you want to just write the mileage, and for reimbursement, if you just want to write the mileage log off directly on your taxes, on your Schedule C, then you will need a mileage log of every mile you've driven in your car for that year. So make sure you have that log. Just an FYI, the reimbursement rate for 2022 has actually gone up 2.5 cents. It's going to be 58.5 cents in 2022. So now's the time to get on board with that log by either starting with a log with a mileage log, just setting it down, and every time you get in your car and you're driving somewhere, get in the habit of writing down where you're going, the date where you're going, and I always look at just the mileage gauge to write, and I just write down the gauge, right? I just write down it's 3,000, it's whatever it is, 200,000 miles or 653 miles, right? And then every time I get back and I stop driving, or every time I get in, I just write that down, because you can do some math and be like, well, 25,000 miles subtract 24,000 miles is 1,000 miles. Okay, so you can back into what those percentages or what the mileage was on that trip. So yeah, get a log. Get a mileage log, or if you're doing a reimbursement for yourself or employees, make sure you have a form to use, and it's just really simple. Name, location, beginning ending start, where you started from, where you ended from, and then the number of miles driven. And then you can reimburse your employees for that mileage. I recommend using the IRS rate for that. It's much easier to just track, and you can use the same justification the IRS does, and your justification can be, well, it's the same rate that the IRS uses, so it should be good. Yeah, so tip number one, get a mileage log or use a mileage reimbursement form to reimburse yourself or employees for mileage. Now, what can be deducted? What is considered a deductible mileage expense, right? It can't be your commute. Commuting cannot be deducted. So if you work in a shop or a store and you drive from your house to work every morning, that's not acceptable. But driving to get office supplies, driving to drop off anything really, it can be considered a mileage reimbursement. Now, if you're going to the bank every week, that's not going to count, unfortunately. Okay. Going to the bank every week is considered it's part of your business circle. If you're within, I think it's like 50 miles of your business, and you're constantly going to the bank or driving out, running to the post office, get bills or drop off things, that's actually not considered a deductible expense because it's part of the normal routine that you go through. In order to get a business mileage deduction, it has to be something that's out of the ordinary. And it has to be something that you can do. So meeting clients or something for lunch or coffee, or driving to a conference is another one. It has to be something that's unique to your business. So understanding what that is going to be really, really beneficial to you. There's a lot of other vehicle types of deductions that we could get into, but number one is that if you want to, and I think you should because it's well worth it. Remember, average gallon of gas is $3.50 in the United States in 2021, roughly, and you're going to get reimbursed for 56 cents of that. You should definitely keep a mileage log. So if you haven't done that for 2021, for 2022, you definitely want to do that. Start that mileage log, start that form so you can do that. Employees that are generally using their personal vehicles, that's a little different situation than the owner using their personal vehicle, okay? So employees need to fill out the mileage form and turn that in as soon as that trip is over, within a week of that trip being over, whatever it is they're doing. So making sure that they get that, so they make sure that they get their deductions on time as well. So again, start a mileage log for yourself, start a mileage reimbursement form for you and your employees. And then let's have a good look at that sunrise. Beautiful little sunrise. It's coming up slowly. It's an overcast day, as you can tell. It's supposed to rain later today, but man, is that beautiful. Some mornings, I just can't believe it. So blessed to live here. All right, start your mileage logs. Talk to y'all later. Bye.